In the modern world, only the sky is the limit. Cryptocurrency seems to have touched the sky and beyond. It has been around for about a decade and a half now, and that sure seems like a long time, doesn't it? But its craze has only started recently. I am yet another enthusiast swept up in its wake. My name is Vihan Bakshi, a 16-year-old student with a hunger to explore the world. Over the past year, I have been carrying out research on cryptocurrency and blockchain technology. Last year in school, I was learning about various types of economies. At the same time, I also read about stock markets, which only further piqued my interest in the field of economics. These two topics got my mind leaping to the possibility of a world where there could be free trading of money without any regulation whatsoever. And that was when my mentor, Mr. Saurabh Nanda, pointed me in the direction of cryptocurrency and its underlying technology. Once I delved into crypto, I just couldn't let go. It was what introduced me to blockchain and remains such a fascinating topic for me, increasingly so due to its significance in the modern era. In today's world, there are plenty of misconceptions about cryptocurrency. So many different people have so many different ideas about it. When I first started reading about crypto, I don't know how, but I was able to catch on to the amount of foolishness associated with it. But the other thing I found was that crypto actually has some serious value in itself. If that is the case, then why can't people use it to get credit on the basis of that value? And that was when I realized that crypto assets can be extremely dangerous in unqualified hands who may use them to deceive the masses, but at the same time extremely useful in the real world, especially in the banking sector. I know for a fact that there is a great need for people to understand this crazy technology. To anyone listening to my speech, I'm going to tell you what crypto is. I'm going to tell you about the chaos it has created in the real world. I'm going to tell you what might the way to go forward with crypto may be. And even if one person gains some basic knowledge from me on this topic, I will have succeeded. Most people consider cryptocurrency to be simply a form of digital cash. They buy it for the sole purpose of trading only. The winners earn millions in seconds while the losers have to beg for work. That is the world's perception. Crypto is so much more. At present, there are thousands of cryptocurrencies in the market, and I mean thousands. But when someone even mentions the word cryptocurrency, the first one that comes to our mind is Bitcoin. It is hands down the most popular crypto coin. In 2008, an anonymous genius by the name of Satoshi Nakamoto published a mere white paper outlining the concept of Bitcoin. This concept was brought to reality in 2009, the very next year, when Bitcoin became the first ever cryptocurrency. You guys must be wondering how a cryptocurrency is actually created. I'm going to be blunt now. When I first started reading, this was not at all what I was expecting. Cryptocurrencies are created by a process called mining. Let me make it clear, there are no shovels or physical mines involved in this process. In mining, high-powered computers are used to solve very complex mathematical problems. These problems are solved by miners to generate the coins. So what that means is that anyone with a laptop that has just enough power can mine his own cryptocurrency without asking for anyone's permission. Pretty cool, right? But if I put it across a little differently, then every crypto coin is just something someone with a laptop made up. Not so cool anymore. And that's what the problem is. Everyone is just so marveled by the unknown. They don't take a pause to think. Really, it's just a magic trick. The harder you think, the easier it is to see through the tricks. Once you see through the tricks, only then can you use them to your advantage. So why are most of us so ignorant to blindly trust this new tech without actually understanding it? I am not at all saying that we should steer clear of crypto, but there should be some caution exercised when dealing with it. Now we all know who this is. A world-renowned businessman, Elon Musk is famous for being the co-founder and current CEO of Tesla, the electric car-making company. This very company invested $1.5 billion into Bitcoin at the beginning of 2021. That's right, $1.5 billion. However, they could not even gain something from this investment. Rather, they faced a total loss of $140 million. This just shows how risky cryptocurrency can be. I'm sure that now you would ask, why cryptocurrency has become so popular in such a short time then? I'll give you the answer. There is zero dependence on banks. No central authority is involved, which means zero interference by the government. Payments can be made from anywhere in the world with the right technology. And most importantly, all transactions remain secure thanks to the highest level of encryption. This encryption is thanks to blockchain technology. Take the example of a car. Say that crypto is the car, the physical body, the headlights, the wheels, everything. That would make blockchain the engine or the motor, an indispensable part. However, the motor is not only used in a car, it has so many other uses. Similarly, blockchain technology is applicable in various other areas. It is not at all synonymous with cryptocurrency. However, let's not go off topic. We all know what a wallet is, a fairly simple thing most of us carry. You need a wallet to store your physical money like cash or coins or even keep your credit or debit cards. The same is the case with cryptocurrency. Every crypto transaction requires a digital wallet which holds an address for your funds. This digital wallet is the garage for your car. The only difference is that this wallet does not actually store the cash but only the address for the cash. It only provides you with the tools you need to gain access to your crypto coins. These tools are primarily a pair of keys, like the keys of a car, that allow you to complete safe transactions. There's a public key and a private key. The public key is used to confirm whether or not only your private key was used in the transaction or not. The other requirement for a trade is cryptocurrency exchange. If cryptocurrency is a car, then an exchange is the showroom. Now, when someone says cryptocurrency, what comes to your mind? Probably Bitcoin or Dogecoin. These are the popular currencies and are available on many different exchanges. However, the lesser known currencies are only available on some specific exchanges. On an exchange, you can buy and sell crypto coins in pretty much the same manner as stocks, and there lies the appeal of being available on many different exchanges. But again, I'm going to reiterate the importance of staying vigilant. Trading on exchanges is not exactly safe, is it? Just last year, November of 2022, one of the most popular exchanges, FTX, owned by Sam Bankman-Fried, collapsed in its working. Just collapsed. What Sam did was create his own coin FTT and put it into his hedge fund. He then blew up the coin's price and used it as collateral to obtain loans. Basically, SBF created fake money, jacked up its price, and used it to get real money. And on top of that, he was also taking money from FTX's customers. It is fairly obvious that this world does not entirely consist of kind-hearted people. And the crypto field now just gives the world another outlet to exploit others. And that is exactly why you need to understand this technology at the most basic level to be able to identify the right opportunities as well as threats for yourself. As a crypto coin grows in popularity, more people start demanding it. When people start demanding something more, its value also increases. Imagine that all of a sudden, many people in the market start demanding analog watches rather than digital watches. This would lead to more firms selling analog watches as well as an increase in their price. Similarly, an increase in the popularity of a cryptocurrency leads to an increase in its value, and it starts being listed on more exchanges to be made accessible to more and more investors. This is based on simple demand and supply. Let's say that I want to exchange my Indian rupees for my friend's US dollars. We need a mediator to do that for us. That mediator is the foreign exchange, where one can trade some particular amount of a currency for its worth in another currency. Cross-chain bridges operate very similarly to the foreign exchange. What if a person owns some amount worth of Ethereum, say $10,000? He may feel that another cryptocurrency like Bitcoin is more profitable for him. In that case, he can trade the $10,000 worth of Ethereum for $10,000 worth of Bitcoin. This is enabled by cross-chain bridges. Both these markets, the cross-chain bridges as well as the foreign exchange, operate on similar forces on demand and supply. These forces lead to cryptocurrencies gaining and losing value on exchange platforms. The supply of a currency depends on the number of new coins mined and the number of new owners who want to sell their coins. The demand, on the other hand, is dependent on how useful it is to own the coins. As in any market, the value of cryptocurrencies fluctuates on the basis of the market's perception of its value, or what the market believes its true value to be. Basically, whether or not these coins have any value depends on whether people they do. It is a simple matter of confidence in whoever made that coin. I myself am of the opinion that once the market has decided on a particular cryptocurrency's value, it can surely allow people to obtain loans by putting that valuable asset as collateral. Let's take the example of Bitcoin. At the end of 2015, the value of one Bitcoin was just $450. Then it peaked in November 2021, where its value reached almost $69,000. And suddenly, in December of 2021, it was down to barely $50,000. And that's how unpredictable crypto is. Currently, Bitcoin is trading at a meager 30,000. Values of various coins do keep on changing, but it is not always the case that a crypto coin will be successful. There is no guarantee that a coin will gain significant value once it is created for sure. Between 2013 and 2022, over 2,300 cryptocurrencies died. But even these currencies must have had some people putting money in them. Even if one person put his money into one of these coins, he would have lost that money forever. But when there is darkness, there must also be light. In today's age, cryptocurrency has become so popular because of its increasing utility. If crypto can work successfully in day-to-day transaction with rapid transaction and low fees, it will be used everywhere, like obtaining loans, payments to businesses, and whatnot. This will only increase its demand. Some independent retailers are already starting to accept it as payment. I myself am developing a theory where a person's cryptocurrency assets can be leveraged to obtain credit cards. It is similar to mortgaging your house for a loan. Snoop Dogg, even she tried to experiment with Bitcoin way back in 2013. The American rapper started to accept payments for his album in Bitcoin. However, this idea was not at all successful because of less awareness about crypto. But now, it certainly seems an exceedingly useful application apart from merely trading. Already, cryptocurrencies are being used to purchase non-fungible tokens, NFTs, as well. They've become an attractive investment with this skyrocketing value creating millionaires just out of the blue. Through all of this, I have told you what is crypto. I've told you how crypto has thrown the world into a frenzy and what might its uses be in the future. Cryptocurrency is a fairly new field that has revolutionized the world. It is immensely important that we understand this insane technology because every analyst or expert in the industry is sure that cryptocurrency is the next step after money. These may be its early days, but crypto is surely the way to go forward. Thank you.